But we are, yeah, here we are. Mr. Matt Beecher, CEO of Neocova. Welcome to Around the Coin.
All right. Thanks, Mike. Thanks for having me. Appreciate it.
Yeah, I'm excited to dive in. We were talking a little bit beforehand about living in Boston and Austin. You want to give a little back? Both of us have lived in both places. You want to just give a little personal background as how you got to become CEO of Neocova and what you guys are up
Yeah, it's like anything. I've been a startup guy, for most of my professional career, and it's always interesting, sort of how you end up in those places, right? And starting my professional career in the early '90s, startups weren't a thing, right? It didn't quite exist. You never talked about it. And in 1992, you talked about technology in terms of high tech, right? That was sort of the verbiage that people used. And, a startup was a thing that usually was backed by governments and needed massive amounts of computing space and lived, if we're talking about Boston, out on 128, and because you needed the space and the real estate and all of these sort of things to kind of do a startup. But, it's interesting from a career progression. I don't think I really sort of got the bug until the late '90s in Silicon Valley when you had the ability to do things faster and quicker, and things were changing in at incredible speed. So, that was when I really sort of dove headfirst and became "quote unquote" a startup guy or a startup person. And through the years, I've had the pleasure of founding numerous companies and being part of some amazing teams, and along the way you get lucky once or twice too, which is great. Did a run as a VC in Kendall Square in Boston, and I always realized that being an operator is where my heart is, and being in the trenches. And what took me down to Austin was an opportunity to take over a company here that was in the student debt space, student lending space. And interesting, that was a bit of a turnaround, and that got completed. And I was looking for my next project, and I ran into an old friend and was telling me about Neocova and how they needed some help. This is probably about 18 months ago. And I said, sure, I'll jump in. And that was 18 months ago. And I took over the reins as CEO in, let's just call it January of 2021. So
Yeah.
always sort of exciting to sort of take that path. But startups, like anything, are a mix of, the blue flame and the gray beard, right? You got to have both, to kind of make them work, which is
yeah, that's true. How did what hooked you on? I mean, having the eclectic and extensive background that you do, what was the pitch that hooked you on Neocova?
It's interesting. I've always sort of focused on, markets generally that are stuck in their ways, right? There's just always been a way of doing business, and that's sort of the presumption. Hey, we always do it this way, therefore, there's nothing to kind of do differently there. And a lot of my companies before Neocova followed that same path, right? Neocova, the initial mission, and still sort of holds true, is really to revolutionize banking technology, specifically for community banks, right? So this is really important. Community banks are from a technology perspective, kind of the disenfranchised in banking, right? They don't have the purchasing power nor the heft of the larger banks that we all know and maybe have accounts with. So they got to work a little bit harder, to do that. But for us, that's a massive, massive opportunity to really kind of, I hate the term, but sort of disrupt or dislodge or displace a lot of the old legacy players, that are just slow and monolithic and bloated and, running technology stacks that, literally, are built off of, mainframe architectures. So, that was one, big thing, which is this is prime for disruption. You have a market too where your customer is telling you emphatically that they so dislike their existing technology solutions, not a little bit. Like I'll go all the way to hate. That's not a bad place to be, right? It's not a bad
Yeah, yeah,
starting
seriously.
point.
So those are the community banks telling you
Those are
that
the
they
community
hate
banks.
the
Yeah.
software vendors specifically?
Yeah, and it's typically kind of the large legacy players in the space. It's the Fiservs, it's the FISs, it's the Jack Henrys. These are massive companies, right? Probably combined, market values of $180 billion. But you look at NPS scores of these folks, and it's like -10, -5.
Wow.
It's tough, but this is large enterprise software, right? It's hard, it's monolithic, it's ton of tech debt. The business model is not skewed in the favor of the customer at all. It's heavy
Yeah.
service. It's heavy contracts that are inflexible, and so there's an opportunity really to kind of disrupt that space, and that's where we sit, and that's exciting, right? That's a
Yeah.
and look, we're at our core, we're a data and infrastructure company. That's not very sexy, right? You think about banking, and you think about a lot of the new fintechs that are hitting the market, and they're all consumer focused. Whether it's SoFi, who just went public, or Chime, or pick your poison here. These are all consumer facing companies that investors love, and consumers love, right? Because it's a disruption of what they're used to, and it's better, and it's more in line with kind of the speed and agility that consumers want to work around or work in. But we're really kind of think about us as the back end, the infrastructure that now allows community banks to sort of keep with that speed and lever a lot of things that they already have, but they just don't have the technology platform to be able to do it.
Mm. And help me sort of
Yeah.
paint the edge of the landscape here. So how many, I guess in terms of numbers, how many community banks are there? How many do you guys serve? Or yeah, help me kind of frame the size of the opportunity where you guys are in.
Yeah. So, in total, community banks in the US, let's call it 5,000, community
Hmm.
banks. And those range in size from $100 million in assets, all the way, I think at the high end, you might see some in the 40 billion,
Hmm.
dollar range, and spread all throughout the country, right? A community bank is, by definition, a bank that is a Main Street bank, right? They
Hmm.
serve their community, and these are the folks that are making ag loans in the Midwest, or
Mm.
small business loans to the small business on Main Street in your town. I mean, they are backbone. They are fundamental, to
Mm.
the United States economy, and we're here to try to support them, and allow them to kind of keep thriving, through their mission to kind of do well by their communities. As far as where we are as a company, we're 18 months into this, right?
Yeah.
And I think the good news for us is we've just seen explosive growth this year, as a company, and anytime you're early innings in trying to do something really, really big, it just feels good, right?
Yeah.
To have uh, you know uh, you know mid three figure growth in any given year tells you pretty clearly that you're onto something pretty good. The
Yeah.
customer wants what you have, and that's a good thing.
Yeah, they were right.
Yeah.
So what is it about being physically close to your customers that community banks benefit from, or is this just a legacy pattern of the past? I mean, do you think the future 20 years away is local lenders meeting in person with people, or is there some local knowledge that is difficult to compete with
It, it,
when you're?
it it's a really interesting question, right? And so I think what I do know. Let's just take that period over the next 20 years. The concept of community is will be redefined, right?
Mm,
And, today I think we think about community as a geographic region. Okay. So,
mm,
XYZ town, XYZ, region, that's a community. I think as we get more segmented and more comfortable with our personas or our identity, especially as how we're marketed to. I think nowadays we're comfortable with that. Like you pick up Instagram and it's like, oh, this is awesome, I want this. That's sort of perfect sort of marketing segmentation and data and all of these things. And I don't know about you, but I'm a sucker for a lot of those ads. And I
yeah.
probably buy more than I should. Like they do a great job with their algorithms and creating the right community and persona around that. I think that's for sure what's going to happen in community banking. And what I mean by that is, hey, Mike, you and I used to live in, or you still do, Mission Hill, Boston. Great. Well, that's a community of sorts, right? Is there
Mm,
something interesting about that from a banking perspective? Or, software engineers, is there something special about that? Or lawyers or I think community can get defined a lot different without those geographic borders. And I think for sure that is going to happen. I think it needs to happen for
mm,
community banks to really kind of thrive going forward. But that Main Street presence, that local presence, that's never going to go away. That's
hmm.
massively important. Right.
Yeah.
It has to be. I mean, in a lot of ways, these community banks are stewards of their communities. You think
Yeah.
about longstanding businesses that exist. Um, they're backed by community banks.
Yeah.
It's just
Yeah.
it's 100% true.
It's interesting. Like if I'm running a large community bank, what would I be? And say I was very focused on the future. What would I be? What's my strategy? Like, am I like Capital One, which is to me a not very impressive brand?
Sure,
They have these great locations in downtown San Francisco and major
sure,
cities, and they open up a coffee shop. They're like, "We're a coffee shop, and you can come in for your coffee, and by the way, get a credit card."
yeah,
Which to me is like, it's just kind of awkward, and
yeah.
maybe it works. I don't know. It doesn't strike me as like the end all be all playbook, but I wonder if these community banks turn into more of like community building organizations that also tend to lend out money or hold your money as part of the value add. I, I don't know. I'm curious if you've given that any thought.
Yeah, look, it's always interesting, right? Because small business lending, commercial lending, commercial real estate lending, it's challenging, right? You have to know the market that you're in. You just
Hmm.
fundamentally have to know the market you're in. And, that's what community banks do a lot of. That's a lot of their lending activities around those things. And, it's really hard for, even a Bank of America for that matter to sort of understand what the, CRE market is in, you know, Des Moines, Iowa. It's tough. It's tough to know, right? The community banks certainly do because they know the businesses, they have a book, they can
Hmm.
understand those things a little bit better and maybe make loans a little bit differently, really to stimulate the economy in those areas. So I think they play a vital role. The challenge that they have, and this is universal, is loss of wallet share, right? And
Hmm.
and so banking, if you think about it as a business, is reasonably simple and straightforward, right? You charge more in interest than you pay. That's
Hmm.
the business fundamentally.
Hmm.
Like it's simple, and there's sort of this inverse relationship of things that people always sort of mix up. But a loan is an asset and a deposit is a liability, right? That's
Hmm.
how banking balance sheets work. And when you can't make loans because you're losing loan volume on sort of challengers to that, whether they're non-deposit lending institutions, SoFi is a great example, or you're losing deposits in general to the same sort of thing, like a Chime or even a Venmo.
Hmm.
Venmo's not a bank,
Yeah.
but they're holding tremendous billions of dollars, on their books that aren't insured by the FDIC, by the way,
Mm.
because that's the way the world's moving. Even, Starbucks gift cards. I think, Starbucks holds something like $10 million as a liability on their on their
Wow.
balance sheet. So these are monies that traditionally have sat in banks that don't sit in banks anymore. So, they're
Yeah.
losing wallet share. So, there's a lot of things that they have to do differently and have to think about differently.
Yeah.
To be able
I
to get.
certainly I don't hear many people in their 20s and 30s talk about a concern for FDIC. I
No,
think that it's partially a generational
I think it is.
relationship to the risk of the entities that store your money.
Mhm.
Partially it's that we don't have an appreciation for the downside when there's a ton of people trying to get their money and the banks don't actually have it, or the places that say they have it don't actually have it, because that hasn't happened in our generation really until what, the Great Depression, like 80 years ago.
Right.
And then I think there's also an impressive collection of companies like Venmo, owned by PayPal, that do, they're pretty. I mean, I trust PayPal a lot. I mean, I trust the government, a lot. But certainly their ability to make companies give up money and their ability to print money. But it's like, yeah, I mean, Venmo is definitely an impressive technology company, so I don't think they would be hacked. I think it's very unlikely. Um, yeah,
But
so
but there's an interesting, sort of side, commentary on that, which is true. I agree with you. The reason for that, by the way, is that, whether it's the FDIC, the Fed, or the OCC, they work very hard, and a lot of what they do is orderly transitions of either bank failures or bank consolidation, right? So
mm,
the end user doesn't feel any of those impacts. That's what they're there to do, right? And
mm,
so, that's sort of the benefit, I guess, of government regulation, is that you won't lose your money. And as you pointed out, people haven't lost their money in the U.S. banking system. We haven't seen a run on banks in a long, long time because of that. Now, what
mm.
we haven't seen, right, is what happens if Venmo goes out of business, right? What happens
Yeah.
if, all of a sudden these fintechs just, collapse and there's actually money there? What happens to that? And that's where it gets a little bit scary, right? And I think all the government agencies are thinking, what does that mean? And how do we address that? And, how do we focus that? Should we regulate it? Should we not?
Mm.
But, from a consumer perspective, we haven't heard it because it hasn't happened yet,
Oh,
right?
really? Like, what? Wait. So the example would be, say Venmo is independent from PayPal and they went out of business. Is the risk that Venmo executives would use the cash balance of Venmo users to float the company? You're saying, and
Sure,
if it's not regulated, yeah, then you
sure.
could do it
Yeah,
technically. Yeah,
yeah.
yeah. No, I mean, I can see it. I
You
can
know?
see it happening.
Yeah. So it's always a little, a little frightening in there. Now we haven't seen it happen, so that's outer edge case for sure. But understand where you sit, right? Where your money
Yeah,
sits,
yeah.
in those cases as well.
Yeah. Yeah, it's a good point. I'm curious to ask you, just switching gears a little bit. You
Yeah,
mentioned you were in VC
yeah,
for a few years in
yeah.
Boston. What was the transition out of VC like? So typically, you have to give a long time commitment to
Yep,
be in VC and be
I do.
successful. How did you like? Walk me through your thought process of why this was not a good long term fit for you.
Yeah, it's interesting, and the VC firm that I started with two partners was called Redstar Ventures, and they're still kicking around in Kendall Square. And we had a little bit of a different approach. So we were actually taking capital and putting it to work against sort of our own internal theses. So we were building, what we thought were great opportunities and kind of building the framework of a company around it, and then bringing in people to run those companies. So it was a little bit different, where we weren't necessarily investing in outside ideas and taking in deal flow. I think
Mm,
after doing that for about 5 years, you realize how incredibly difficult it is to um, uh, uh, build companies, if you will, as a business and at scale. Doing one, over 7 years is hard enough. Trying to do a couple a year is just maddening. So,
yeah.
I think we realized that was a pretty challenging, effort. And for me, just getting back to operating, and kind of driving company growth is where I'm most comfortable. Getting
Yeah.
in the action. I think for me, I was a bad VC because I was the person who couldn't help themselves sometimes and
Yeah.
was like,
Yeah.
you should do this and you should do that, like everything you shouldn't do as a VC.
Yeah.
I was
Yeah.
like that person. So I'm like, oh, I should not be doing this at all.
Yeah. Yeah, it does strike me as this is why I always feel it's so ironic, maybe is not the best word, but displaced when I see great software engineers start companies and they exit the company and then they turn into a VC
Right.
where they're assessing other people's early stage personality and their ability to grow. It's like, well, it's not really the right person. It's not the right skill set. And like the typical software founder is like super good at what they're doing, heads down, focus on their business. They're not building an extensive network of deal flow in the future.
No.
And so I think the VC characteristics that are successful is like you have a big network of people, you're constantly connecting with people, seeing what's going on, and you're not necessarily deep in anything. You're the jack of all trades.
No, and you kind of got to put your ego in the back seat a little bit too.
Mm,
Somebody told me, actually a pretty well-known Silicon Valley VC investor, told me way back when. He's like, look, here's what VCs do. They sell money, and everyone forgets that that is the primary job of a venture capitalist. It's not to run the company. It's not to, do all this stuff. It's not to be a cult of personality. You sell money. And so everything that comes around selling money, you have to amplify. Like you look at a guy like Fred Wilson, who is probably one of the most successful and well-known modern day VCs. What did he do, starting, God, 15 years ago? Like he started a blog when blogs really weren't a thing. And they were incredibly helpful. He
mm,
was giving secrets, he was adding value back to the
mm.
community. But, I don't think he ever lost sight of the fact that his job is to sell money,
Yeah.
you
Well,
know?
yeah. Then the question is why? What makes you good at selling money? Why would someone take your
It-
money over other
it-
money?
exactly. That's exactly right. And, in some of the better VCs I've seen, don't have operating experience, don't come from, successful companies, are just sort of uniquely positioned, have great personalities, have great disposition, and can create that persona of, hey, I want to buy money from this person, even though everyone knows that, or you may not know that's not the game, right? Oh, I'm
Yeah.
going to get a term sheet from XYZ. No, you're selling and buying money. That's what
Yeah.
you're doing.
Yeah. What's interesting about that is in many ways it's very parallel to the community banks because community banks while they're overtly community and locally focused on their geography, VC has been locally focused on its geography for pretty much its entire existence aside
Right.
from the last year and a half.
That's
And
right.
now like really I think there's mainstream deal flow happening over Zoom and people are making investments realizing, okay, I don't need to fly out or live in San Francisco, I could be
Yeah.
anywhere, build a remote team. And now it's like, okay, now the pressure's really on because you can't have a local monopoly in your target area. Like you can't
Nope.
be, I'm like a West LA focused VC, I'm going to know every company here and win. Well, now you're competing against every other VC if that company can go raise some people across the country or
Well,
world.
and the composition of companies has changed, right? So let's just think about that, from what's
Mm,
happened over the last 18 months, right? And, historically, we were founded and headquartered in St. Louis, Missouri. Two people in St. Louis today, right? And the majority of our team, now lives in Austin, Texas, and in Portland, Oregon, with other people sprinkled throughout. So I think even the composition of companies is changing pretty dramatically, right? So to your point of, oh, I'm only going to focus on startups in West LA, that actually that concept might go
mm,
away,
mm.
right? It's like there actually isn't that, um,
Yeah.
you know.
Yeah. Yeah. I tend to think a major, in my experience, when choosing investors, it, it always, it felt like this person that we're talking to it always felt like the biggest thing is they have the ability to help us raise more money in the future. That if they're a great operator, that's great. If they can contribute to board conversations, that's great. Um, but it was really always forward looking as to saying, could they, do they have a network of people in the future? Would they be impressive to help us, raise our
Right.
Series B or Series C? Um, so I maybe that's the differentiator. Maybe that's a downward pressure on, say, community banks and VCs to have the connection to a bigger check sizes, really being stage
Sure.
agnostic.
Yeah.
You know,
Yeah. I think that's true. But look, I think, I'm going to contradict myself a little bit here, but, as people start to open up and get on planes and, start to travel more, I think even in the last week, the amount of meeting requests that I've had has skyrocketed, from folks that that I know, whether they're VCs and others saying, hey, I'm going to be in Austin this week. Can we grab
yeah.
coffee? And, so I think we are getting back to adopting that face to face and people understanding the importance of doing that.
Yeah. And I think it is largely going to be cultural, and it's
Yeah.
going to be if a generation grows up on their phone and on
Mm-hmm.
the internet and on VR headsets, in the future, then the ability for us to get together and hug at a coffee shop isn't going to be as remarkable and different as it is
Yeah.
if we're remote. So I think that's very true, but it will shift eventually. I don't know if that's good or bad. I don't even know if it's right to label it as good or bad, but it does feel a little Ready Player One,
Yeah.
where
Doesn't it? Doesn't it? I
yeah,
mean, seriously.
yeah, yeah.
Yeah.
Oh man. So what other projects that have you been involved in that were influential or a big part of your journey? I mean, you mentioned you started a couple other companies,
Yeah, look,
Vault.co.
you always remember, the big successes, but I think, the big failures, teach you a lot as
Mm,
well, right? And I think a lot of that is it teaches you what not to do in some cases. And I can tell you, being out in Silicon Valley in the late '90s, it was Fantasyland. I mean, it was amazing, right? And scary and, hard work. But I think, that period of time, without a doubt, defined who I was as a professional and more importantly, a startup professional, right? And, the one takeaway that you have from those experiences, as everyone, this is pre, the bubble bursting, never count your money before it's in the bank because everyone did it, right? Everyone thought they were going to be a gazillionaire. Never count your money before it's in the bank. And you got to work really hard. And I think what was really interesting in that period is the amount of hard work it took to build something. That was a huge component of success, and we were a Kleiner backed company, and I think we raised 150 million bucks, and this company was called My CFO, and we went from 30 people to 300 in 3 months. But
wow.
if you left the office before 11 p.m., you'd get the side eye, right? Because everyone's still there jamming, and that was the mentality then. I'm not saying that was healthy, but it taught you a lot that, hey, hard work is a really important ingredient in all of this. I had the good fortune of starting an investment management company in Boston called SCS Financial, which was acquired by Focus Financial some years ago. And, that was very defining for me because it was a ground up experience. We started with literally 4 people and a bunch of office chairs in sublet office space in Waltham, and with a dream that we were going to take business away from Goldman Sachs in business, and lo and behold, we did it. It took a long time, but again, those are defining moments around how hard it is to build a business. It isn't easy. None of it is easy, right? And you got to have certain components that work, and some don't. But at the end of the day, you put all these things together, and I'm a firm believer that 3 things need to exist in a business to be successful. Doesn't mean if these three things exist, your company will be successful.
Mm.
But without it, I can almost guarantee you they're not going to be successful. Those three things, I mean, this is not trademarked by me. This is a pretty, common verbiage, but it's vision, it's execution, and culture. And I think through all of those things, the one thing that I've learned, over the years, and it's the easiest one to skip over, is culture, because culture's hard. It's really, really tough, and but it's wildly important for the success of an organization. So, at Neocova, and I think any future companies, I do or don't do, culture has to be sort of the one priority. So I think that whole sort of journey, you learn a lot about those things, like having a really good
Yeah.
vision. What the heck are you doing? Like everybody
Yeah.
that works in that company has to sort of be aligned around that. You got to execute, right? And the only way you can do those things is if you have a really good culture. If you don't have a good culture, and I've been in organizations that were really good on 1 and 2.
Yeah.
Number 3 was a
Yeah.
train wreck, and guess what? Company was a train wreck.
Yeah. Yeah.
And we've probably all been in those situations, right? This is
Yeah.
toxic.
Yeah.
This is terrible. Okay, let's stop that.
So
How do
I
we
want to
fix
ask you two things. I really like that a lot. I mean, while they are very common words to
it?
use,
Sure.
they feel different as you start to grow in your career and operate more companies.
Mhm.
Uh, on vision and culture, on vision, how do you decide? What's your operating philosophy between what you communicate to the team about what your vision is
Sure.
and what you dream about might be the direction of the company someday in the future? Where do you draw the line and say, guys, this is what we're doing? And then also allow yourself the creative direction to say, maybe one day we spin off this and this and this. And
Yeah, look, I mean, I think, vision for me is always, that sort of that BHAG, right? The big, hairy,
mm,
audacious goal, and it should be, it has to be, you want people to think and believe that this is bigger than maybe what it is today, right? So for us, there's a vision that we are going to revolutionize banking technology for the better. That
mm,
implies not the bad, right?
mm,
And that's the vision. That's a big vision. What isn't in that vision statement is sort of the micro sub pieces, right, of how we're doing it and how we're going after it and what the market opportunity is. We just know there's an opportunity to absolutely revolutionize how banking technology is used and delivered, starting with community banks. Great vision. That's it.
mm,
I think the extension of that is really sort of understanding why that's so exciting. So, okay, great, Matt. So what? Okay, at one level, this has the opportunity to be, a multi-billion-dollar company because of that vision. And here, let me show you why. Okay, that's interesting. It also has, the ability to really help and help communities thrive, right, through what we're doing. So there's a lot of things intertwined there: mission driven, commercial gains. All of these sort of great things tie into that vision, but at the end of the day, it all stems from the same thing. There's a problem, there's a solution, and let's think big about all of
mm-hmm,
this.
mm-hmm.
Let's
Yeah.
think big. And that
Yeah.
drives
Yeah. And if
culture
you,
too, by the way, right? Which is
yeah.
like, yeah, let's do that.
Yeah. Yeah. So how do you how do you practically, like tactically implement good culture or help steer culture in a direction where it doesn't go bad? Like
So,
what do you think about? Yeah.
so let me tell you, trying to do that over the last 18 months has been challenging. We haven't been face to face. People are working at home and they're not in the flow of conversation. So a lot of times it's easy to feel left out. It's, shoot, are people talking about me? Why did this meeting happen and I wasn't there, right? These are things that can erode culture, right? If you're not
Mm,
ahead of it. So, I think what we've done, especially in this year, is kind of just collapse every preconceived notion of what that is, right?
mm,
And built from the ground up and just broke it down. And the beginning of the year, we were incredibly honest with each other. We have all hands meetings every month and a lot of communication, throughout those as well. But we just were just very honest about something's not working here, and I'm telling you about Neocova and how do we how do we make it work, for everybody. And that actually was great because from there, everyone took ownership in what culture is and prioritized that, and out of that came, um, uh, came discussions and came a rebuilding of trust, came better communication. We launched a formal and incredibly powerful diversity, equity, and inclusion program, even though we're a small company. And, from my perspective, I'm not the person, that needs to own and drive culture. I want to empower people in the organization to do that. And we've done that. And it's just been, absolutely remarkable. But it comes down to trust and people wanting to own it. And, I read somewhere or somebody told me it's culture is one of those things that you don't take off the shelf when it's convenient
mm.
and deal with it. If you don't define it or it doesn't get defined, it will define itself. And if and you might not like the results, and you probably won't. And so we've made that a priority, and we will continue to do that. But it's not easy. It's not an easy thing.
Yeah. Do you see defining culture? When you say defining culture, does that mean, say, like writing down 10 rules for the company and having examples of those and saying, hey guys, like this is our 10 commandments, so to speak. This is, if we don't do this, then we're in trouble, or having rewards that incentivize people to follow this type of behavior. Is
Yeah,
that, how
I
do you,
think guidelines are always really, really important. I think kind of the behavioral norms around culture are probably more important of what's okay and what isn't okay. And part of that is you know not embarrassing people, but it's like if somebody does something you don't like, it's okay. Like you can approach them
mm,
with that and let them know and here's why. And so I think it is part of it is to articulate those things, especially as you get larger. The fear is that those words tend to be empty vessel a little bit,
mm-hmm,
right? Everybody tends to
mm-hmm.
have the same ones, and you really kind of need cultural carriers throughout the organization that are going to support that, and that's part of what we're building here as well. So
Yeah.
we don't lose those threads, especially as the company grows. It's tough to do, right?
Yeah. Yeah. In my experience with these, what would you call them? Not rules, guidelines,
Mm,
examples of patterns of behavior that define culture. I found that they tend to work best when we make a bad hire, or we make a good hire and somebody does something wrong, and it's just painful. There's like, oh God, the way that this man or woman is talking in this meeting, like, this is, I don't know how exactly to quantify this, but the way that we're in this meeting right now is not working.
yep.
So then you go back to the drawing board, you say, okay, we listen closely when other people are expressing their thoughts and emotions about a subject, and then we reflect. So we as as a community, we always give space for people to express themselves, and we don't cut them off. It's even simple things like that where uh, it almost course corrects when your team is smaller. And if you're going from 30 people to 300 in three
Yeah.
months, maybe that's not
Yeah.
possible. But if you're kind of course correcting your small team, either by bringing people in and kicking people out, and then defining the rules by which the people who left had to leave, then it kind of is that seems to work in my experience.
I think you're absolutely right. I think what's been interesting for me is being, and I can say this now. always been the youngest guy in the room, but now I'm the oldest guy in the room of being of a generation. And I gave you the Silicon Valley example in the late 90s of just, grinding it out and working, 100 hours a week. That's what everyone did. That's a culture, right? Not
Yeah.
a healthy culture, but that's a culture. Financial services, spent a lot of time in financial services, and it's a cutthroat industry, incredibly cutthroat. That's a culture. And I think what's been interesting for me is, having the ability to get educated and be educated by the workforce. It's changed, and we've had some really interesting all hands discussions in our company. And I, walked away from a lot of these discussions with my mind kind of blown, because I was like, oh God, I am the old guy. I have to open my mind a little bit, because, the thinking, feeling, the things that are important, for folks today are wildly different than, when I was sort of coming up the ranks. And it's so much better. I guess is my point, right? It's so much better, and that's exciting, right? It's
Yeah.
exciting to kind of build new cultures, around that.
Yeah. The challenge is not to lose the light side of what you had, the
Yeah,
good stuff,
yeah,
right? Like a culture that works like really freaking hard is a difficult group to compete with.
hmm,
They may not be the ones that are going to last the longest. Like,
right,
what do you do when you achieve number one market share and you have to
sure,
sustain that? I don't know. Maybe there's a conflict there. I've thought about this a little bit, but there can be a conflict between the organization as a whole and the individuals who participate in it. There's I know in Wall Street oftentimes, and even in tech, there's a culture of some companies will operate with the culture of you come in, you work super freaking hard for 5 years, you burn out, you make a bunch of money, and then you go do something else.
sure.
Like that can work for that organization, but it's got to be clear that this is what we're doing. Otherwise, it doesn't work. It doesn't
Right.
work.
It doesn't work. Yeah, it doesn't. It doesn't
Yeah.
work. That's absolutely right. Yeah, absolutely
Yeah.
right.
Yeah. And I think now it's even more complex or interesting when you consider that we're not competing just domestically anymore. These aren't just US companies competing. We're now competing, the cultures of the companies are competing against other countries. And so if countries are willing to just, work super hard and produce something, it's almost like industry specific, I think, to some extent. If
Hmm.
you're in a maybe a quick transaction or high deal flow business to business industry, maybe there's more of an emphasis on being more cutthroat than if it was consumer, where it's
Sure,
more in touch with how people are feeling and interacting with the
sure.
products. I don't know. I mean,
Yeah,
that could be totally wrong, but
yeah.
that's like
Look, I
that's a
mean,
gut feeling.
I think this notion of product empathy or customer empathy. We never talked about that 10 years ago. You
Yeah,
kind of push a product out, and it either works or it doesn't. And now, you think about how the user is going to use it, and how they interact with it, and where they interact with it, and how they feel when they interact with it, and those are all positive things. Like, those are really, really great things, because we're human beings, right? And we should be treated as such across the board, right? Technology is
hmm
just a piece of it.
yeah, yeah, yeah. You have any pieces of advice that you would give your younger self?
Um, yeah, it's always like the same thing, right? Don't take yourself too seriously. Don't sweat the small stuff, because you totally forget about it. But I think one thing that does come with age is the ability to kind of filter those things out. So it's all part
Mm,
of the journey, right? You can say,
mm,
hey, I shouldn't have worried about that, or I shouldn't have stressed out, or I shouldn't have worked so hard and spent more time here with my family and my friends. But it's all part of the journey that gets you to here, right? And I kind of sit here at this stage in my career, and I kind of know what to worry about and know what not to
yeah.
worry about. And you don't get there unless you had those prior experiences.
Mm.
So I don't know if there's anything in particular, like other than kind of
Yeah.
the normal stuff, to be honest.
Yeah, the more I've grown and learned, the more I'm really slow to label things as good or bad.
Yeah,
Even suffering is like if you go through a point in time in business or personal life where you're just really feeling pain. It's just this is a
yeah,
really uncomfortable situation. I'm embarrassed. I'm whatever depressed about something. It can be an incredible motivator to push you in a new direction.
yeah.
And who's to say that thing that was absolutely terrible in this moment is not the most motivating, best thing that's ever happened to you?
True.
So I always find it a little bit of a double bind to try to go back and label things. They did it. There was a good interview with Michael Jordan. They asked him, what's some regrets you have in life? He's like, man, I don't have any regrets because you don't know how that thing would have affected my
No,
long
it's
term
it's it's
trajectory.
true, right? You just don't know what would have happened, there. And look, everybody's got their own truth, right? So, in kind of your journey, there's probably things that you would have done differently. You wished you had done differently. You wish you had, the facilities to do stuff differently, whether it's maturity or confidence or whatever the case is. But it all leads you to here, for some strange
Yeah.
reason.
Yeah, some strange reason. That's the truth. Are you guys looking for anything in the company? Are you trying to raise or customers or
Yeah,
employees?
I mean, I think
Any shout out?
with any startup, I've never been involved in one that isn't raising money. So
Hmm.
that's always sort of an active pursuit, whether you are out there in the market doing it or thinking about it. So that's absolutely the case for us. And we've had the good fortune of raising a couple rounds of financing and really are looking to kind of do our next one before the end of this year. So that's
And
exciting.
how much have you guys raised so far?
So publicly, and I'll sort of stick with that. It's just around $10 million.
Okay.
Dollars. We did a little extension round at the beginning of this year, and so yeah, always looking for money. I think you want to go to market with all the right things, and make sure that you have all your pieces together. And I think for sure, where we're at right now, we're incredibly excited and sanguine about getting more money in the company to grow it, right? And
Mm.
growth for us takes on a couple of different components. One is bringing more banks on. We really like where our product's at, and are excited about bringing it to more community banks, over the course of the next year. But in order to do that too, we need to expand the team and continually improve product. I've never been in a startup that you feel as though your product is good. You always think your product stinks. I don't think our product stinks, but that's always sort of the pursuit, right? Is to continue to perfect product, and we're always very very focused on doing those things. So yeah, we're incredibly stoked for the rest of this year and heading into 2022. We think we're really well positioned. And look, I mean, you look at the fintech market in general, and it's hopping. It's
Mm.
hopping. There's a lot of activity happening out there, which we see come and go in cycles. So you got to strike while the iron's hot.
Yeah. Throw in crypto into the mix. I'm sure
Jeez,
it's a
I
whole
know
lot to think about.
exactly.
Yeah, that'd be interesting to see how crypto affects like local community bank lending.
Yeah,
I'm sure that
and some of the more progressive banks are thinking about it, right?
yeah.
How do you bank crypto? What does that mean? What does it look like? What do regulators think about it? So I think you're going to see a lot of advancements, come in the next 5 years around that. And we have a big movement too around sort of banking as a service providers, right? These are
Mm.
the behind the scenes bank charters, basically, that are working with fintechs. That and the crypto is undoubtedly going to be a big piece of that. Has to be, right? Has to be.
Yeah. Yeah. Good. Yeah. That seems like a march forward into the future.
Yeah, it is.
Um, where can people? Are you on any social media, Twitter or anything online? That people can look at?
No, I'm not.
No.
No, I'm not very active, but I do have a Twitter, which I think has one or two posts on it.
Dormant status.
Yeah, dormant status.
Nothing wrong with that.
Yeah,
All right. Well, Matt, I really enjoyed talking to you. I learned a lot.
likewise.
And yeah, congrats on all the progress you guys have made. And we'll have to have you back on someday.
Awesome. Thanks, Mike. I appreciate it.
All right.
All
Take
right.
care.